Assalamu alaikum. I'm Ibrahim Khan from Islamic Finance Guru. Are Islamic mortgages really Islamic? This is an old debate that there are two very established positions on. In our humble view, having read all of the legal documentation and considered the arguments, we think that Islamic mortgages, while not perfect, are perfectly permissible and the best thing that we have right now. But in this video, rather than just giving our view, we thought we'd recreate a live debate between the two sides. So speaking for Islamic mortgages being permissible, you have me. Speaking against Islamic mortgages being permissible, you have cousin Maj. May the peace and blessings of God be upon you, as Marmaduke Pickthall once said. I am Maj, born Majid, and for those people who are proponents of the view that Islamic mortgages are not permissible, rest assured that I will be communicating your argument as robustly as possible. We'll inshallah be putting as clearly as possible the arguments from both sides. But before we start, we would be very grateful if you could subscribe and hit the bell notification so you're in the loop on all of our future videos. But before we dive in, let's just clarify what an Islamic mortgage actually is. In a nutshell, it is not a loan, it is a business partnership. But I imagine you're after more than just a sentence. That's fine, I'll go into more detail. There are actually two main kinds of Islamic mortgage. One is the murabaha mortgage, which is a markup sale, and the other one is the musharaka mortgage, which is a partnership. In this video, I'll be focusing mainly on the musharaka structure because that's the one that is the most prevalent in use in the UK. So really simply, a musharaka mortgage works thus. Let's say you have a 100,000 house, you put a deposit of 20% towards it. So you put 20,000 towards the house, you own 20%. The bank, on the other hand, it contributes 80%. It contributes 80,000, it owns that percentage. What happens over time is you start every month paying off the bank and buying a little bit more of its percentage every month. So over time, you might end up having 50-50 ownership. And over time, eventually, you will end up owning the entire house. And as your percentage ownership increases, your rent that you're paying the bank for its portion decreases until eventually you're paying zero rent and you own the entire house. The absolute essential thing for you to remember as the key distinction between an Islamic mortgage and a conventional mortgage is the ownership risk that the Islamic bank takes. It isn't lending that money to you. All its relationship isn't just bound up in that loan agreement with you. It actually takes a stake and ownership over the house itself. Let's explore this in the arguments to follow. Islamic mortgages are just far too expensive. Now, I'm someone who is not that price sensitive, but Islamic mortgages are targeting a captive audience and just forcing them to take prices because there's nothing else they can do. They are the Harrods of banking when it comes to price, but they are the Primark of banking when it comes to quality. I mean, with a conventional mortgage, I can secure 1.5 to 2% per annum rates. But with an Islamic bank, I am forced to pay 3 to 4%. Now, I can accept a little bit of a price differential. After all, I shop at Waitrose, but not double. That is criminal and that is punishing Muslims for being Muslims. This is the most common complaint about Islamic mortgages, but it really is comparing a samosa with a jalebi. Because on the one hand, you've got a conventional finance industry that is multi-trillion with multiple players, thousands of lenders out there, catering to an audience of 60 million with a centuries-long industry with the entire regulatory framework set up for them. And on the other hand, you've got Islamic banks. There's about 3 of them that offer Islamic mortgages, and then they're catering for an audience of just 2 million. They've only been running for about a decade, and they are struggling to make a profit for the vast history that they've had. It's just not a fair comparison. But perhaps the most important response to this argument is look at where the banks get their money from and look at where the Islamic banks get their money from. The banks, they can borrow off the Bank of England for just 0.1%, and they can borrow off each other at the LIBOR rate, which is very, very low as well. And on the other hand, you've got Islamic banks, because they can't use conventional borrowing, they actually have to use their savings accounts. But the problem with savings accounts is that you then have to pay the owners of those savings accounts that 2% or so that you have to. So if Islamic banks are getting the same rates as a conventional bank in terms of their financing, then happy days, complain away, because they should be offering the same thing. But if they're not, and they very much aren't at the moment, then it really is unfair to think that Islamic banks are going to run at a loss in order to provide us Islamic mortgages. It doesn't make sense. And remember, look, any new industry with any new product has associated startup costs. So, when something is introduced for the first time, you have to do some marketing, some education, some regulatory work, some legal work to make it all work. And that has costs attached to it. And that then, unfortunately, seeps through into the actual product. It makes it a little bit more expensive. But as the product expands, as the market expands, that product becomes cheaper and cheaper and cheaper. Right now, Islamic banks are still very new. It's still only a decade compared to the hundreds of years that conventional banks have been running. So we just need to give them a little bit of time. But pardon me, Orion Bank last year made a 6 million profit. It can't be that hard up, surely. It is true that Al Rayyan Bank has recently started making profits, but over the vast length of its history, it has been making losses. And it is only since it's had a massive injection of cash from Masraf Al Rayyan, the Qatari mother company, that it's actually got to stabilization. And remember, look, this whole setup, this whole regulatory framework within which Islamic banks have to fit in is set up for conventional banks. Islamic banks always have to do that little bit extra to make everything work for them. And that adds cost, it adds time, it adds complication. And I think it's just fair to give them a little bit of leeway when it comes to pricing to factor all that in. Islamic banks link their profit rate to the LIBOR rate or the base rate. These are rates that banks use to lend to each other. Now, if they're truly charging something that is different to interest, why is there this link? It seems to me that at this point, the benevolent mask of righteousness has slipped to expose the dark underbelly of sin and riba. Look, Islamic mortgages operate in a mainstream landscape. That means that the regulator says you need to make sure your Islamic mortgage product is comparable to the mainstream. So when you advertise, you need to be using percentages and rates just like everyone else, so that people can compare between the two and see what the price differential is. That doesn't actually mean that Islamic banks are charging interest. It just means that they are making it comparable. What they're offering, they're making that comparable to what a conventional bank is also offering. Let's give an analogy to explain. On the one side of the road, you've got a pub that sells beer, and on the other side, you've got a juice shop. Now, the juice shop may decide that actually all of the mango that it sells, the mango juice, it's going to peg that to the price of the beer that the pub is selling. Yes, the two prices now match and are comparable, but they are not the same thing. The beer still remains haram and the mango juice is permissible. That's what's going on here. But they don't just refer to LIBOR rates and base rates, they actually use them to price up their products. There has to be interest involved. But now I think we're overthinking things. If Al Rayyan Bank, which has a whole bunch of scholars who work with it, by the way, is saying that they don't get their money from haram sources, then I think it is incumbent on us to take their word for it, to trust them on this. Interestingly enough, if Islamic banks were actually getting their money from haram sources and then using Islamic mortgages to lend that money out to us, that would technically still be seen as permissible. And that is because we're not that interested as Muslims in going really deep down the chain of where that money came from, because ultimately somewhere there will be some issues with it. What we are concerned about as Muslims is the transaction where we are dealing with that counterparty. Because think about the implications of this. The implications of this would be that that newsagent could not sell his chocolate bar to someone who works at a bank, for example. That newsagent couldn't sell to anyone who works in a haram industry like a pub, for example. It's just not practical. As someone who has worked extensively in the corporate industry, I can tell you that there are many so-called Islamic finance experts that have made their name by replacing the word interest rate with profit rate in legal agreements. They are what I like to call the Control F kings. Look, I think that there is some degree of truth to what Cousin Maz says. There are people who perhaps in the corporate world do that when it comes to the corporate transactions. But when it comes to the retail end, you and I dealing with house purchases, there is actually a lot of thought that has gone into creating this Islamic mortgage. And the reason for that is because there's actually a lot less room for maneuver when it comes to the retail end, because there's a lot more regulation, because the regulators want to protect consumers. And there is a very distinct set of documents attached to an Islamic mortgage, whereas there is a very different set of documents attached to a conventional mortgage. In an Islamic mortgage, you've got the purchase agreement, you've got the lease agreement, and you've got a whole range of ancillary supporting documents. Whereas in a conventional mortgage, the key agreement is actually a loan agreement, and then you've got ancillary documents around that. And yes, it is true that there might be some degree of crossover between the two sides, because ultimately you are purchasing a house in both situations, and there will be some kind of guarantee or some kind of mortgage taken in both situations. But there are key differences between the two mortgages, and it is apparent if one reads the actual legal documents. And yes, look, there might be certain phrases or certain paragraphs that may be very, very similar between the two sides. That's fine, because ultimately you are buying a house, and there are certain things that are uncontroversially going to be covered by a conventional lender and an Islamic lender. I agree that it can be a bit off-putting for the uninitiated when it comes to legal documents, and you see that there are very, very similar legal clauses in two agreements. But the thing is that if you're buying a house and you've got a bank on one side and an Islamic bank on the other side, there will be a lot of crossover in terms of the things that they want to be covering off in that document. That doesn't mean that the Islamic bank needs to come up with something entirely different, right? Because ultimately they are buying, they are buying that house. That's what the transaction is based on. Now, Islamic banks talk a lot about risk sharing, but if that's the case, then they should be taking both the risk and the costs associated with ownership. They should pay for the insurance, for heaven's sake. Look, frankly, I think this is something that is correct. Islamic banks do need to be paying for their share of the insurance. And the reason is because their ownership risk has been hedged away heavily using this insurance. So if they're not even paying for the insurance, then that really is undermining, I think, what they're up to. So they should be doing that. Having said that, technically, in the letter of the law, and in the view of the senior scholars who have signed off on Islamic mortgages, Islamic banks can structure their transactions in a way that requires the tenant or the buyer of the house to pay that insurance. But in our humble view, we would encourage Islamic banks to actually start paying their share of the insurance. It's not a lot of money either. Islamic banks should be providing us a certain pricing mechanism, and yet they all rely on either the LIBOR rate or the base rate to work out their monthly rent. Now, Islam doesn't like gharar, does it? Uncertainty. We're supposed to avoid it. Why then are we basing the rental rate on something that fluctuates so much? Look, Islam doesn't like gharar fahish or excessive gharar, but Islam does tolerate gharar yasir, which is a little bit of gharar. And that's because every transaction has a little bit of gharar yasir in it, right? And when it comes to the rates that Islamic banks peg their returns to, it is actually the base rate as opposed to LIBOR. LIBOR is a lot more volatile, whereas the base rate is fixed. every month and it sticks at that. But even if the banks used LIBOR, it is still a very, very standard rate that everyone in the market knows what it is. And the whole point of avoiding gharar is to avoid dispute. And if there is no potential for dispute when using these rates, then the whole argument is by the by.
Now, something that I'm really quite upset about is that Islamic banks talk about risk sharing. But if that's truly the case, then they need to be sharing the downside risk as well. Because if you're not sharing in the loss, then what's the point about talking about risk sharing at all? It's just completely unacceptable. Look, the best way to think about it is, let's say you've got two brothers, Arif and Bilal, who have inherited a house. And Arif is quite poor and he's thinking he wants to sell this house off. The market right now is quite down, so if they sell the house, it's going to be at a bit of a loss. It's going to be at below the market price. Whereas Bilal is quite comfortable, he doesn't want to sell the house right now. Arif says to Bilal, please, can I sell the house? Bilal said, fine, you can sell the house, but I want to get the market rate on my share. Because, I don't want to sell. Why should I sell other than the market rate? The bank is in exactly the same boat as Bilal here. Why should it have to sell out at a loss just because you happen to want to do that at that particular time?
It is a well-known precept of Islamic law that there are not allowed to be two contracts in one. This is not the Marks and Spencer's discount aisle. And yet Islamic mortgages do have two contracts in one. There is the sale contract and then there is the lease contract. That, to my mind, is unacceptable. So the hadith about not having two contracts in one, according to Imam Shafi'i, that is dealing with two kinds of transactions. The first kind of transaction is where you say, look, you've got the option of two pricing mechanisms. One where perhaps you might pay £2,000 for a deferred payment, or you pay £1,000 in cash now and it's left open which option you go for in the contract. The second kind of contract that this hadith is forbidding, according to Imam Shafi'i, is where it's conditional. So you say, I will sell you my car if you buy my watch from me. So there's a condition attached and the agreement is not a standalone thing. Now with Islamic mortgages, neither of these two situations apply, and so the hadith that forbids two contracts in one does not apply.
That's it for today, folks. Look, Islamic mortgages are not perfect, and inshallah we hope that they will get cheaper as the industry develops. And at Islamic Finance Guru, whenever we have an issue, we raise it with the Islamic banks and fight for the consumer. But it is not fair at all to say that Islamic mortgages are just like conventional mortgages. Senior scholars, very respected scholars, have spent a lot of time developing these products and the underlying mechanisms that allow them to work. And we should do all that we can to support Islamic banking and Islamic finance to develop by using it as much as we can. When we created the UK's first Islamic mortgage comparison engine, our sole aim really was to increase the transparency and the competition in this market, because only then will we actually have lower prices and better quality products. We'll get more entrants coming into this market, and that has to be better for the consumer. And it also helps Islamic banks as well, because they can actually reach the audience in a nicer, easier way than they have been hitherto. But we'd love to hear your comments and your thoughts as well on this whole really complicated issue. Until next time, Assalamu alaikum wa rahmatullahi wa barakatuh.